Hello, everyone. Thank you so much for taking part in this Bloomberg TV debate. Now, what a momentous day after that huge agreement by the EU finance ministers last night to have this huge package. Maybe it will actually try and temper the zeal of a lot of the governments to regulate more and faster. Now, I want to thank our panelists for being here today. I'm going to have a very quick introduction of each of them, and then I will ask them just in a minute to tell us what worries them the most about regulation and about what they're seeing from various governments around the world. Then we'll have a panel discussion for about half an hour, and then throw questions to you guys on the floor. So please, I want this to be a lively debate. No question is so stupid or, let's have fun with this about regulation. So please do ask all of your questions. Now, on my left, we start with Lord Levene, chairman of Lloyd of London, co-chair of the World Economic Forum on Europe in 2010. Then we have Mr. Luc Frieden, Minister of Finance of Luxembourg, who has had a very, very long night. So, very long working night, I should say. Mr. Peter Sands, Chief Executive of Standard Chartered, and Annette, member of the Group Executive Committee of the Chief Executive Officer of Zurich Financial. Now, I'd like to start with Lord Levene. What worries you the most about the regulation? Because we do hear regulation being thrown around, the word regulation, by governments. What is your biggest concern?
Well, my biggest concern is that clearly the essence of regulation needs to change after the huge problems that we've had in the last couple of years. But I hear very little discussion, and by discussion I mean discussion between the two sides. There was a lot of talk about this when we were in Davos in January, and you had a lot of the politicians there who were making pronouncements over what they wanted to happen. But it was like, if you can imagine, two sides lobbing missiles over a wall at each other, and the wall was solid, and they were not talking to each other. And there was very, very little discussion. I asked the politicians, I said, well, when you talk to the banks, when you talk to the insurers, when you talk to the other people involved, what do they say to you? And they'd look at you blankly and say, well, we're not talking to them, we're talking to each other, and we will tell you what to do. That's not a good way to have any kind of negotiation. And I think that regulation needs to evolve by a series of discussions, because after all, we're talking about regulating an industry which in each country represents an important part of their economy and which has to be seen to work. And you can't have a discussion like this on a one-sided basis. If we take, for example, the latest IMF proposals, it would seem that the IMF had a long discussion amongst themselves and then announced this to the world. They didn't talk to us. I don't think they talked to the banks either. I just find it remarkable that an organisation of that kind should come out with these proposals, which just haven't been the subject of discussion. That's what I think needs doing.
All right, Luc Frieden, the only politician on the panel. Are you going to stick up for the government?
I feel a little bit in minority, but I think no society in general and no industry, including the financial industry, can live without rules. And so the question is, do we have enough rules? Did we have enough rules to prevent the crisis? And once we have made that constat, we can move to a second step, that is to improve the regulation. I don't think that the answer is that everything must be over-regulated. But obviously, I think the financial industry had become too complicated, too complex. We observed that when we were rescuing the financial industry at the end of 2008, it was very difficult to find out how much toxic assets and other complicated products there were out there. Then we saw that we needed a little bit more coordination in Europe. So I think we need more European supervision, more European answers to a certain number of problems. So I think indeed we need a different kind of regulation. And we did some things already since the beginning of this crisis. Supervision, European Systemic Board, all these things go into the right direction. And one last point, I do think that governments should not develop rules out of a pure theoretical approach. And what might be true for the IMF isn't true for the European governments. I do think that we in Luxembourg, my colleagues in other European countries, do talk a lot to their industry. And we try to listen to what they say about capital and liquidity requirements, what will be the effect of such decisions, what will be the effect of a possible bank levy or a financial transaction tax. I don't think that most of my colleagues will just introduce such things for pure populistic or other reasons. I think we want to prevent risks, we want to prevent a further crisis. Yes, we need more regulation, we need more European regulation, but carefully listening to what the markets say and taking into account what the cumulative effect of a certain number of such decisions will be on the good functioning of the financial industry, which is essential for the real economy to work.
Peter Sands, do you feel that actually governments have vilified bankers, such as yourself, too much, and just want to regulate the bankers almost for the sake of it?
Well, I think banks have a lot to answer for, banks and bankers, and I think bankers have been pretty insensitive at a time of acute social and political uncertainty and difficulty. So I don't think bankers can be sort of let off lightly. But bankers are also part of the answer. You can't run a modern economy without banks and bankers. And therefore, it is important that they're engaged in dialogue. I mean, I think one concern I have about regulation is that it's actually seen as too much of the answer or too important. The reality is, as I think we've seen over the last week or so, is that the problems of over-leverage, including of governments, and the problems of macroeconomic imbalances are as much at the root of the crisis as failures in regulation, which is not to say absolutely we need better regulation, but better regulation alone won't make the financial system safer on its own. You need those other things to be true as well.
Annette, what worries you the most about regulation today?
Well, I think in general that if I talk from the position of insurance, that insurance regulation is on a reasonably good track with the impending implementation of Solvency II. Obviously, we're still working out the exact details of that, and that would be a concern in terms of the real implementation. But I think we're very supportive of having a risk-based regulatory system, and also having international regulatory coordination, which I think is vital for the future. And the concerns I have is that insurance and banking gets completely lumped together. And insurers and banks have very different models of operation and different ways of working, and therefore I think to apply a sort of more of a one-size-fits-all is really not appropriate.
Look, Frieden, how do you justify to your citizens that actually we're going through a massive crisis and a lot of the bonuses, for example, are still being paid out? Is it unjustified that a lot of the regulation does seem to curb this excessive risk-taking because of the money we pay out to bankers?
I think we talk about regulation, but we should also talk about self-regulation. And I think the issue that you just raised is one which could have been, to a large extent, taken out of the political decision-making process, because I think that the bonuses, to some extent, are not the main problem that led to the crisis, but this is mainly an ethical issue. If we see that a number of companies have to dismiss people, that governments have to reduce public deficits and to take away social benefits, to reduce salaries and pensions, then of course it is quite shocking for the ordinary citizen to see some of these amounts being paid out. So I do think that this should first and foremost be dealt with by self-regulation, some ethical behavior, and I do know that quite a number of companies support ways to do not pay these excessive bonuses, or, and that is the point that governments are more interested in, to make sure that risks can be prevented by not paying out these bonuses immediately, but over a certain period of time, taking into account also the long-term perspective of a company. So I think this should not be, this is not the main issue for governments. I do know that some of my colleagues might use this to talk about the financial industry, but I do think the financial industry per se knows what it has to do, and there are always some people who behave unethically, but you cannot generalize this, and that is certainly not my opinion when it comes to dealing with this issue in the banking sector. But preventing risk is an issue for governments. We should deal with that at the regulatory level.
I think it's very nice to find myself in violent agreement with a politician. But, I think Luke spoke in a very statesmanlike manner, which many in the industry would agree with. But one area that I wouldn't, I mean, you said at one stage we need more regulation. I don't think we need more regulation. We need better regulation. And I think that sometimes you have regulations which are so complex, and there's so many, that in fact people can actually hide behind those to do things which we would all regard as socially irresponsible. And I think if people will take away the view that the management of financial institutions are responsible, that they're not unaware at all of the problems that are being caused, and whether they have people who work for them who were paid obscene amounts of money or not, they recognize that today that's not possible. And although everything is relative, if you look at the payments that are being made in many of the largest financial institutions, they are nothing like on the scale that they were 2 or 3 years ago, when they were certainly out of context. And I think that if the regulation that comes through is straightforward, and again, and I'm sorry to repeat this, but I think if the regulators, if the not so much the individual governments, because I agree, I think the individual governments do talk to the businesses, whether they be banks or insurers in their country, and they understand it. But then it gets to the next level up. And I mean, as Annette said, and as I said before, the IMF's treatment of this issue has been scandalous. I mean, for them to produce a report which lumps together the banks and the insurers, and the banks, as we've all said and everybody recognizes, need to be sorted out. If you just demand huge increases of capital being put into the system by the insurers, all you're doing is reducing the amount of cover that's available for the people who need it and making the cost of them more expensive. So the IMF have a lot to answer for, and that they really need to get themselves into a position where they can look at these things more reasonably and not just make pronouncements that cause problems which are unnecessary, particularly in a part of the industry which has been in good shape. And have they made proposals relating to the banks, which the banks will need to look at? I'm sure Peter will want to answer that. But I think that they need to understand that you can't just frame an issue and then put it up there and say, this is our decision, without asking anyone else.
Peter Sands, you're mainly based in the emerging markets, and there it's very different. They've been regulated for longer, and you were telling me possibly better. What's the difference between Europe now trying to regulate bankers and the emerging markets?
Well, I think actually the markets in which we operate in, which is Asia, Africa, and the Middle East, I think Asia in particular has quite a lot in its regulatory frameworks and approaches that the West could learn from. There's a lot of sort of fashionable talk in Western policy debate about sort of macroprudential regulation, about ways of intervening to take the steam out of bubbles and so on. The reality is that's just a matter of course in places like China, India, Korea, and so on, and has been used very effectively for over a decade. And those of us who run banks in those kind of environments are quite used to living with that. So I think there are quite a few lessons, which is not to say I don't think any part of the world has the perfect answer for all of this. But I think it is quite important that the voices of Asia are heard properly in the regulatory debates. And that's why I think one of the really positive things coming out of this crisis was the creation of the Financial Stability Board and its expansion to include the membership of the full G20, because you're getting a broader constituency of voices and experiences in the policy debate.
Annette, do you feel we've almost lost the political will because we're in a recovery phase of actually having some kind of global framework? So it makes it a lot more difficult for the European Union, for example, to regulate on its own.
Well, I mean, I think like Peter was just saying, it's really about having a global dialogue here, and I think fortunately the trains have left the station, in different parts of the world, and they're not running on the same tracks. So to kind of coordinate this is tough. It's hard, but it's important to have this global dialogue within the G20 in order to move forward on this. It's vital, I think, that we do that, and when we're supervised, group supervision and really thinking about the group and all of its entities rather than thinking about it purely on a nationalistic basis, I think is vital to ensure that we really understand the risks which an individual group is running.
I think this point about the sort of commitment to a global agenda and consistency is a vital one, because I think it's dissipating. What we're seeing is a lot of big announcements were made around last year, and now implementation of these things is very patchy. If you take the remuneration, for example, I'm completely supportive of the G20 FSB principles on remuneration, and we fully implemented them. Our single biggest problem about them is they've not been implemented in quite a few places, which means as we reward and try and attract people, we're competing in an uneven basis. And that's just one example of many where people are marching now to very different rhythms in different countries.
I think that you have to recognize there is competition around the world. When we had the G20 in London, which went on for about 36 hours, at the end of that, you had ministers coming out and saying, right, well, we've solved all the problems of the world, we're all in violent agreement with each other, and the whole crisis is going to go away. Unfortunately, that didn't happen. And as Peter has said, the agreements that were made supposedly in terms of control of remuneration haven't happened. Now, it's fine for the politicians to blame the industry when they don't get their act together, and that they don't perform as they said they're going to, but the politicians say that they have done it. They come out of a conference like that and announce what's been agreed, and then it doesn't happen. And there has to be an understanding. Of course you can make an agreement between all these countries, but at the end of the day, you will find that somebody wants to find a way through it. One country wants to say, well, we have found a loophole, and we're going to exploit this. And if that isn't sat upon, it's like one institution, it doesn't matter whether it's a bank or an insurance company, saying, well, we know what the rules are, but we're going to play it a different way. The politicians have to be able to deliver on this. And I mean, I understand that's a very tough, very difficult thing to be able to do. And particularly when you've got public opinion pulling you in one direction, you've got the economy pulling you in another direction, and you've got the individual businesses in your own country pulling you in a third direction. So it's not an easy thing to achieve. But because of that, I don't think it's right for politicians to stand up and say, look, these individuals and the businesses in our country haven't delivered, because they haven't actually created the climate in which they can do so. I think it's improved. I think following the G20, there's been a lot of change and a lot of recognition that things have to move. But these things do take time. As we've seen just now with the agreement that was made regarding the euro last night, which was historic, we all hope and believe that will be a great achievement. But it didn't happen in 5 minutes. And I think that as much effort needs to be put into negotiating between the governments, the regulators, and the industries in each case, as has been achieved there. I think if we can do that, then you'll see a way forward. But just making statements that, they haven't delivered, they're not complying, doesn't help anybody.
Luke, I'm sure you want to answer those accusations.
I don't think that there are two worlds, the public world and the private world. I think they work much more together. But this raises the question about decision-taking and implementation, about how we proceed. And I think that we need to make sure that everybody is included. And therefore, there is a key role for Europe to be played in all this. If we go to the G20 as Europeans, and there are 5 European voices around the table, then I think we will not make sure that there will be good decisions being taken from a European perspective, and the implementation will be very difficult. So I think there is a clear need here for strengthening the European voice in such fora such as the G20. And the second aspect is the G20, which I welcome as including new emerging economies, has one serious problem, and that is that not all important financial centers, all the countries are associated to it, and that the procedure to take decisions is everything but transparent, because it's not like an international intergovernmental organization. So take countries such as Switzerland, such as Luxembourg, others, they are not in the G20. That doesn't mean that they disagree, but it makes it more difficult to come to a decision that will also be more easily implemented elsewhere. And the decision-making process, even for those countries who sit at the G20 table, they tell me that unlike the European Union, unlike other international organizations, there is no transparent mechanism to come to a conclusion. In times of crisis, I think this can work. In normal times, after the crisis, I think there needs to be a better European representation at these international organizations. Europe must speak with one voice. It is for the European Commission, it is for the European presidency of the Council to speak on behalf of the European Union with one voice, and all the other European countries represented at the G20 should support more clearly the European voice. And thereafter it will be easier then at the European level also to implement the G20 decisions.
And Europe has finally spoken with one voice regarding the euro. Yesterday, I wanted to ask all of you what your thoughts were on credit default swaps, these terrible, some say, instruments that may have led to the exacerbation of the problem in Greece. Peter?
I think we have to start from the basic fact that the problem in Greece, as it is with any country or organization that has borrowed more than it can afford, is that it borrowed more than it could afford. And CDS may have played a role in highlighting that fact, but the basic reality is that it borrowed more than it could afford. Now, what do I think about credit derivatives? Actually, credit derivatives aren't a bad idea. But like most ideas in financial services, be they credit derivatives, securitization, and so on, if you push them too far, you can turn a good idea into a bad idea. And that's quite possible with credit derivatives. But I really don't think that if you're talking about the Greek problem, that you're fundamentally talking about any sort of technical aspect of financial services. You're fundamentally talking about the basic thing of if you borrow more than you can afford to pay back, it will end in tears. It's a very, very simple lesson.
Annette, any thoughts on?
I mean, nothing to add to that, really. I think that sums it up.
Lord Levene?
Well, I think that the euro was formed 98, 99. And to create a whole new currency, as we heard earlier this morning, it's the second largest traded currency in the world now. Other currencies have been around for much longer, and they've had their own crises. The euro has now had a substantial crisis, and it's being dealt with. And as Peter said, I don't think credit default swaps are the cause of the Greek problem. They were a symptom of it, if you like. And in individual countries, if they are operating beyond their means, if they were on their own, they'd face the problem anyway. Now they have other people in there with them who have to try and help them support it. And I think hearing what was agreed last night, a lot of support has come through. But that support will not continue unless it's seen that the countries that have had the problems are putting their own act together as well and operating responsibly. And so the two things have to work hand in hand.
Look, a lot of the European politicians have said that actually this was also the doing of speculators. Do we need more transparency? How do you see what happened, what panned out in Greece?
Yes, but let me first react to that was just said. I think that in our conclusion of this morning, there are clearly the two aspects One is to supporting the euro with a massive package of 500 billion EU and 220 million IMF funds. But there's also the other aspect, and that is the strong commitments by some countries, those that were more in the headlines, but also by the others, even if that is not in the final communiqué, to reduce their public deficit. Fiscal consolidation is a key element in our discussions in the Eurogroup on a monthly basis. But I also would like to recall why it has come to this situation. All of our governments spend more money because there has been a financial crisis which turned into an economic crisis and which is about to become a social crisis. Don't forget that in some countries you have now an unemployment rate of 20%, such as Spain. So all this has to be put together, but we are clearly determined on a collective basis to reduce our fiscal deficits. I think that on the issue of speculation, that is, like with CDS, only part of the story. The main aspect is you have to create trust in the governments, trust in the public finances. As we had to rebuild the trust in the private banking sector at the end of 2008, beginning of 2009. And we can only build that trust if we seriously show that we are capable of taking political actions to reduce the deficits and the long-term financial obligations of most of our countries, which is the financing of our social security systems. And if we manage to achieve that, if at the same time we try to reduce the risk, among others with the new task force under President Van Rompuy, I think then we will be credible, and that will push away those who will merely speculate, because the trust element is more important than all the other aspects.
If I could just pick up, I absolutely agree that what was achieved last night was a historic achievement, unprecedented speed in terms of getting a coordinated approach, and as you rightly emphasize, probably the most important thing is the commitments around fiscal consolidation. The only point I'd pick up is I think it's a little too convenient for politicians to say, oh, the deficits are due to the stimuluses we introduced in the last year or so in response to the crisis. The reality is a number of countries were running very substantial deficits anyway. And so the underlying structural deficits were very high and unsustainable. And then on top of that, they quite rightly responded to the crisis. But I would argue that the real problem was the underlying level of structural spend that has to be pulled back.
Let's see what the floor thinks about any of these points, regulation, what was achieved yesterday, and if you could also state who the question is for. Great.
Hi, David Ellis of Bloomberg Markets Magazine. 6 months ago, Lord Levene gave a speech in London saying that conversations about compensation was possibly dangerous talk. Since then, we've had a banker bonus tax, a 50% tax in the UK. And as Peter Sands said, there's a regulatory imbalance in your business. For Peter Sands, will there be, or are there emerging winners because of that regulatory imbalance? And for Lord Levene, does that put London on the side possibly as a loser in the hunt for talent?
Do you want to go first?
Okay. Well, I said at the time that I thought that in the UK, where the financial services industry has been the largest sector of the economy, to put on taxes which are going to dissuade people from joining and coming to the UK, and to persuade those that are there to leave, was a bad move. And I still believe that's the case. I think that, as I said earlier, there are many of the institutions now who have learned that they've got to trim their sails and that they've got to be more responsible. But if you're doing that, and you're going to pay more normal type compensation, whatever that means, and at the same time you're going to tax people more heavily, it's not going to help the industry. And I still believe that's the case. Are we seeing people leave? Yes, we are. Are they leaving in droves? No, they're not. And we're all trying very hard to make sure that doesn't happen. I don't think it's going to be the sort of doomsday scenario that some people paint, because we have the important issue of critical mass in the UK, which is so large that it's not going to go away. It's not just the bankers and the insurers, it's the accountants, the lawyers, and everybody else who makes up the system. We have a huge advantage in terms of the English language, and it's a place that people want to come and live. So it's not all going to disappear in a flash. But it's at the margins that it's important. And when you get some of the more specialist, profitable and mutually profitable organizations that are going to leave, this is what we're going to miss. In the insurance industry, we're seeing businesses that maybe would have moved before to Bermuda are now going to move to Switzerland. And they find that Switzerland's actually a rather good place to go and operate. And that's fine for the Swiss economy, but it doesn't help our economy. And so I say, at the margin, it's not going to help us. And if the trickle becomes rather more substantial, it's going to be a bad thing. And I think that the politicians have to understand that there's just so much you can squeeze, and then you have to stop. And to have, as we've had just recently in the election campaign, some suggestions over how the banks should be taxed in future, how you should have, from one supposedly serious politician, a suggestion that no banker should be paid a bonus of more than £2,500. I mean, that's just living in the realms of fantasy. It may sound good in an election campaign, but it makes no sense at all. And we need to have politicians that are serious and who operate in the realms of the real world. And so I stick by what I said before, that we have to have a tax regime which is fair, but which also doesn't scare away the very people who are there and who are contributing to the economy and who are contributing to what was certainly previously massive inflows of revenue to the government through the taxation that they were raising. So, you know, there's just so far you can go, and we're in danger of crossing that line.
If I can just add very briefly in terms of the question on winners and losers, I think there will be winners and losers both in terms of financial centers and in terms of institutions, individual companies. I think it would be very unfortunate if that's primarily driven by regulatory arbitrage and ultimately dangerous.
Another question?
Morning, my name is Annette, and I'm the Executive Director of the Lisbon Council, a think tank based here in Brussels. Following up on what Mr. Sands just said, I completely agree that the problem with budget deficits didn't just start as of last year. We knew that we had a major problem in Europe with regards to sustainability of public finances before. Now we finally have this debate on sustainability of public finances. We also heard it this morning from the presidents. What I'm completely missing in this debate, and this is perhaps a question to Minister Frieden, is what about quality of public finances? Because if it's all about consolidation and cutting budget deficits, that's fine. But the truth is we need a massive investment in our economy right now to rebuild it, to have the money to invest in education, skills, human capital, green growth, innovation, research and development. And I know that the finance ministers actually gave the European Commission a very hard time with the 3% R&D target that is part of the Europe 2020 strategy. So my point is, the sustainability of public finances, yes, we finally have that debate, but we also need to talk about quality of public finances, because most of the public finances go into consumption and just redistribution, when the truth is we need massive investment. Thank you.
We did not start this debate about sustainability of public finances during the crisis. I mean, the whole European Monetary Union was set up with the idea of having stable, sustainable public finances. So the criteria of the so-called Maastricht Treaty were drafted in that spirit. We were reminded dramatically that this is important during the crisis, and now we have to come back to the path of sound public finances, which will be extremely difficult because also of the social cost. And I would like to stress this point. I think there is no alternative to what governments have embarked on, call it exit strategy or something else. It will be extremely difficult to implement that because it will be a huge social cost. Reducing pensions, like in the case of Greece, where the average pension is 600 euros per month, increasing the VAT rate to 23% at the same time. So this will lead to huge social problems. Nevertheless, there's no alternative to sound public finance for the reasons we developed before. And then I couldn't agree more that it's not just having figures, but it's about what are the priorities in financing. And therefore, I think that next to preventing further crisis, we need to have priorities, and the discussion that we have about the economic governance of Europe, that is also about talking where the money should go and what the priorities are. And that has to be linked to a view on the economic development of our continent, especially in the Eurozone. We are trying to do this, but even those who always argue in favor of a gouvernance économique sometimes forget back home that when they take political decisions, that they should beforehand discuss them in the Eurozone. So I'm discovering sometimes things in foreign newspapers where I saw that that should have been discussed beforehand. So let us now solve this crisis. We are, I think, on the right track. Last night was not an easy thing because we have no political union. We have a common currency, but we discovered last night, I didn't discover it last night, but I had the impression that some discovered suddenly that there was no European instrument. And unlike what was said in the former panel here, the Commission proposal for introducing some guarantees to a Commission loan had no legal basis. So we had to come up with a new instrument ad hoc for this situation. And therefore, I say we need more Europe. We need, I wouldn't say, because there are so many English friends around me, a political federal structure. I wouldn't dare to say that. But we need something more European instruments in order to also define common political priorities, and that is what we need for the quality of public finances in the future.
For those of you who may have studied the recent political debate in the UK, which has led up to our election, where we have presently a stalemate, the most critical issue in that was the huge deficit which we face, and the difference between the two parties. One saying, well, we want to sustain employment, we want to sustain jobs, and we're going to resolve the issues somewhere, somehow. And the other party saying, but we can't keep doing that. We can't keep paying out massive amounts of money in public sector pay to keep people in a job and watch the deficit growing and growing, the value of the currency falling, and somebody has to take some very hard, tough, unpopular decisions. And everybody would love to live in a nirvana where everybody has a very good job, they're all very well paid, there is no unemployment, and everyone lives in the best of all possible worlds. Unfortunately, in the real world, that doesn't exist. And however our new government is going to be formed, which hopefully will be settled in the next couple of days, they're going to have to take these decisions. Even those who said that they wouldn't do it, in the real world, they're going to be forced into it. And I think you have to, as Peter was saying earlier with Greece. I've heard stories of people in Greece saying, well, why should we have to retire, why should we have to keep on working past the age of 55? Why don't we just all retire and go and sit on the beach? It'd be very nice, and the state will pay for us, and it'll be great. Unfortunately, in the real world, that isn't what happens. And so nobody wants to take these tough decisions, but I'm afraid they're coming. And maybe we'll get our act together after that, and it'll be a little bit better in a few years' time. But right now, it's going to be pretty nasty.
Peter and Annette, do we need to start actually running governments more like companies?
Well, I mean, I think, albeit for me to sort of, tell people how to do their jobs, I wouldn't. But I think we do need to look at how things are run. As a company, you can't do some of the things we've just been discussing in terms of, living beyond your means, because you are, regulated, and because you have to answer to your shareholders about what you're doing. So I think there certainly is an element of that that needs to be thought about, and thought about very carefully. And I agree that there has to be some very tough decisions taken on national levels to be sustainable going forwards into the future.
I think the nature of government in a modern democracy is very different. And I actually have enormous respect for politicians in the way that they have to navigate the many different stakeholders and pressures and so on. If I was to point to one area, though, that I think that governments can learn from the private sector, it's in the delivery. Governments tend to put an awful lot of focus onto the announcement and the policy. Certainly my experience is that a lot of the things fall through the cracks in terms of actual delivery. And I hope that in all this sort of thinking about the sustainability of public finances and all that, there's a lot of focus on how we maximize output, good results for every dollar, pound, euro of taxpayers' money that is put into something.
A question from the lady on the second floor.
My name is Ludgard van den Beuk from Belgium, and would like to put a question to the panel, whoever considers it worthwhile to reply to it. Looking at the analysis of the financial crisis, I've come across several times the same element, which is short-termism. That the financial sector was too much oriented towards the short-termism, and that based on that, we've seen what we've seen. Maybe to some extent this also holds, by the way, for the public sector with the populism. But coming back to the financial sector, we've seen, looking at the regulation and the recipes coming forward at the EU level, but also at the national levels, diagnosis and trying to find recipes for turning back towards more long-term visions. And there, executive remuneration and certainly variable remuneration is one element where governments and self-regulatory bodies try to integrate more long-term thinking into the remuneration scheme. We've seen also, especially in the UK, tendencies to convince shareholders, even institutional shareholders, to take a longer-term vision, like the stewardship code in the UK. So my question to the panel is, how do you think our financial institutions can become more long-term oriented if they have to cope with short-term oriented shareholders? I would like to have a reply, whoever considered this.
Well, if I was to answer bluntly, I would say there's been some sort of pleasing the crowd type moves in terms of making financial institutions look more long-term, in terms of deferred compensation, conversations with shareholders and so on. But actually, if you look at the meat of what people broadly call Basel III, in terms of capital and liquidity regulation, it fundamentally makes financial institutions more short-term. It becomes extremely expensive and difficult to do all the kinds of long-term infrastructure funding that is so sorely needed around, not just in Europe, but around the world. So actually, the result of the direction of change in terms of regulatory reform is not going to deliver a result that makes longer-term thinking happen. It'll do the opposite. That's certainly true in the banking industry. I suspect some of the Solvency II things are pushing in the same sort of direction as well, but my insurance colleagues would have a better view on that than I would.
Well, I think that Solvency II is a good thing. I think it needs careful adjustment to make sure that you don't come up with a number which is unreasonably high. But there, I have to say, that is an area where there is a good dialogue going on. There's a very good dialogue going on between the industry and the regulators. And I have high hopes that we will end up with a solution which everybody thinks is a good solution. So that is something where it's beginning to work. But it's always been a question of how do you moderate the long-term requirements with the short-term needs of the market. I happen to be chairman of an organization where, strangely enough, and it is unique, we have no shareholders. We have no shareholders at all. And I have to say, it's the first time I've chaired a business that has no shareholders. And actually, it's rather refreshing because you can look long term. You don't have people poking you and saying, "Well, what are your results going to be at the end of next week?" But I don't. As much as it works very well, I can't claim it's a model for others because we're there by a sort of historical accident. But I don't think it's unique to the financial services industry. I used to be in the manufacturing industry, and there we always used to complain that the shareholders had a very short-term view. And it was very difficult to build a business where you have people looking over your shoulder and poking you every few weeks to know what your results have been. But a lot of lessons have been learned. And if somebody asked me, and I think of myself as an optimist, how we were going to come out of this, I think we will come out of it with a better construct. And it's difficult to say how that's going to be arrived at. But as much as people have perhaps criticized market forces, I think the market will drive us into a position where the businesses that exist there do so responsibly and contribute to the economy. Because, as Peter said, the banks and the bankers are not blind and deaf, and they've heard what's happened, and they recognize that there have been mistakes that have been made. But the same people who are the shareholders and want to see short-term returns, wearing another hat, are the people who are complaining about what's happening. And so that's why I believe it's the market that will decide, and the market will take into account public opinion and political opinion. And as I say, I'm still optimistic that in due course we'll come out of it with a setup which is much better than we've had up until now. But if you ask the critical question, how long is that going to last? The answer is it'll last until it goes wrong again, which it undoubtedly will, because it always does, and then we'll have to resolve it again, or our successors will have to resolve it again.
Gentleman, front row.
Donald Ricketts from Fleishman Hillard. Over the last decades, considerable political capital has been put into addressing the barriers to trade and trade protectionism globally. I'd just be interested to hear in the panelists' views about the potential for regulatory protectionism. From what the panelists were saying about multi-track, different speed implementation of G20 pronouncements, and in some cases a failure to even live up to them. What are panelists' views about the threats of regulatory protectionism emerging? And we've heard a lot about the need for G20 members to talk more in fulfilling their promises at the delivery phase, but what more could be given to teeth of G20 pronouncements to make sure they happen?
Luke?
I'm not a member of the G20, but I do think that that risk of protectionism always exists, and that has been reinforced to some extent during the crisis. But nevertheless, if I take away the short-term retrospective perspective, then I think organizations such as the European Union will make sure that within a certain economic area, the same rules will apply, and there are mechanisms in place, such as the European Commission, the European Court of Justice, to make sure that the same rules will apply and that there's a level playing field. And therefore, also G20 is a positive instrument. However, the G20, unlike, for instance, the EU, has, of course, no institution such as the European Court to enforce their decisions. And therefore, that is certainly something that, I wouldn't even call it an organization, but a forum like the G20 is lacking. I think, on the other hand, that some peer pressure, some evaluation done by international organizations, be it the OECD or other organizations, will help bring this agenda forward. But we saw during the crisis there were clearly some tendencies by some to protect their national markets. But I think you cannot seal off your market anymore. So in the long run, there will be a more general regulation, and therefore this easy sentence, all financial products, all actors have to be regulated, I think is something that will, at the end of the day, dominate. May I add one comment to what Peter said earlier on between companies and governments? I think we learn a lot from companies, and I'm glad to hear that sometimes there's some positive comment from a company about governments. I think the biggest difference, and that we saw during the crisis, even last night and in the weeks before, between a company and a government is the implementation of decisions. A CEO of a company can decide a certain number of things and implement it right away. In a democracy, you need to have a majority in parliament. And I think some of the difficult decisions that had to be taken might have been more easily taken by the governments if governments would have been alone. But fortunately, we live in democracies, and we also need to get parliamentary majority. Next to convincing the citizens and voters of what we are doing, but that is something that might be even easier than in the short term to get a parliamentary majority. And that in all the countries of the European Union and elsewhere makes a huge difference in implementing a certain number of decisions.
I think this is a very good point. I think one of the things we've seen in the whole sort of set of issues around Greece and last night's announcements is the difficulty of reconciling political timetables and market dynamics. Yeah. The reality is this announcement was too late. And because it was too late, it had to be very big. And the later it was, the bigger it had to be. And I just think, and it's not that one is right and the other is wrong. It's just that markets tend to move to a certain pace. And political dynamics have their own rhythm and pace. And it's very hard to get the two to work together. If I could just build on the points to the question. Look, I run a bank across 70 or more different countries. Increasing financial regulatory protectionism is a fact. It's drifting in at a very low technical level all over the place. It's often dressed up as protecting the stability of individual markets. But the reality is, if the world ends up with a more fragmented financial system, we'll all be worse off. The cost of credit around the world will be greater. And I think it's by no means proven that a more fragmented system is a more stable system. So I do think there is a task within Europe, within the G20, within the FSB, to keep battering away and calling individual governments and policymakers to account for things. Because I only think it's that kind of peer pressure that stops that happening.
Whenever anybody talks about protectionism, I mean, I always speak against it. I think it's a very bad system. But you have to look at the reality. You will remember during the US presidential election campaign, we had all these slogans about American jobs for American workers. We had the US car factories which were losing out to their competitors around the rest of the world, and we're never going to get anything made overseas now, we're going to keep it all onshore. What actually happened about that? Very, very little. You have these takeover battles. We had Kraft buying Cadbury's, and this was a great British institution. It was going to the nasty Americans. You remember some time ago in France, it was decided that yogurt was an important national strategic asset and couldn't be sold to any nasty foreigners either. But that is overcome, and is overcome by the fact that we do leave it. And we will go back to what the buzzword was 10 years ago in a globalized economy. And you have businesses around the world, many of which are larger than some smaller governments. And they will make sure that their own businesses run on a global basis. And they will make sure that they put their assets where they can best work. And they will tell governments, and I like to think that virtually all governments are sensible, that this is the way to make things happen. This is going to improve your economy. So, as I say, I will always talk against protectionism, which I think is very bad, but I think the threat of it and the political talk about it is often a lot worse than actually happens. And I don't think we've suffered that badly, but people, I think, are aware of it now and basically are not going to allow it to happen.
We're unfortunately out of time, so I just wanted each of you to do a very small conclusion, 30, 40 seconds. What can Europe do to still hold its own and have its place in regulation, without suffering too much because of these imbalances we've been talking about? Levene.
I think that the governments have to talk to their industries. I think people have to listen. They have to be more aware of what's happening. And they've got to look at this, not just Europe-wide, but internationally. And I think if they do that properly, then they get it right. And hopefully in a couple of years' time, we'll be looking in a much stronger position.
Luke?
I think that we are still in a very serious and very difficult crisis. and we must draw the lessons of that crisis. The answer is not in doing over-regulation. It often reminds me of the event of 9/11. A number of things were decided thereafter which maybe were an overreaction when it came to air travel and so on, but we needed to have a reaction. This time, I think we should take more time to think what led to the crisis, and there are a number of limited issues that need a better regulation. I tend to agree with that word. It's not more regulation, but better regulation about some specific products which were maybe, which led to a too risky behavior and to a too short-term behavior. And the rest in the minds of the people, shareholders are people, clients of banks are people, they also should have the long-term perspective.
Yeah.
I think avoid thinking of regulation, financial regulation, as a silver bullet that's somehow going to solve all the problems. Better regulation is part of the answer, so is fiscal consolidation, so is international action on some of the big macroeconomic imbalances around the world. One needs a combination of these tools to get the world back into better shape.
Yeah, and I'd say really around three things. I mean, dialogue, working together, and appropriate regulation. So the summary of some of what has been said.
Thank you so much. I want to thank our panelists, and I hope you've all enjoyed this debate as much as I have.
Thank you.